Turnaround Tuesday, Warriors. How's everyone doing today? I hope okay. Hugo, hi, Richard. Dollar's moving around, buddy. Hello, Sinatra. That's life. That's what people say. You're flying high in April, shot down in May. That's you, Sinatra. So a little pullback in the metals here. I want to buy them. I want to see if the yen has more than this candle up, get some type of fib retrace that might maybe give us a little cheaper entry on the metals. So, the yen is really the key. Again, yields, you tell me, guys, I'm kind of agnostic. I will say I've gone neutral on my positions. Nasdaq, remember I've been showing this line for a while, and we took it out and then closed right on it. And now we're trading in between the wedge breakdown and the megaphone. So maybe there'll be a better rally in the next couple weeks to try shorts. Definitely you do have, it's easy to identify the difference in strength between the S&Ps and Nasdaq. So what's your weak sister? Russell's taken over the lead of the strength. But see, S&Ps, never took out this low. And Nasdaq did. So if you're bearish and you want to sell something on strength, what's your preferred short? You want to sell the weakness, right? Well, then you want to be selling euro over cable as well, right? Into the NFP on Friday, that's a nice intuition there, DJ. So dollar's trying to dig its heels in. We could still get a test down here of 93.5. But whenever EG is heading down, it's hard for me to be bearish a dollar. And it really fell apart in the last few days. And, had one more big rally up here. Blake was long. He was looking for, I think, at least 86. And now here we're threatening a breakdown. So
Groundhog Day.
Hey, how are you, Ryan? How are
Hey,
you?
Blake, you all right? Yeah, Dale, sorry, called you Blake again.
Yeah, it's okay. I'll trade ages with him. So what do you think about relative weakness in euro compared to cable, EG?
Yeah,
I think we're finally going to get this wash out here.
I don't know. It's like Groundhog Day, isn't it? I've been waiting for this moment for months. Yeah, 85 handle. We're close again. If we get a break, we've got to get below that 84.80 level.
Yeah.
That's my marker really for a proper break.
Okay.
I shorted it up in the 86s on that rally because I just didn't trust that cable move last week. But the volatility there, I didn't want to get caught with my pants down in that. You can manage euro sterling a bit better on the volatility side than you can cable. So if you want to trade a pound, it's often a good pair to go through.
I think that the same is true if you want to trade euro. I mean, their EG is a lower beta trade for either.
Yeah, it's actually moved more. But it's actually moved more recently than the euro has.
Yeah, that's true. That's true. But usually it's that way. I say like when I'm bottom or top picking euro, I'll get long or short EG, and I say it's kind of like the senior citizen way of top picking.
But it's also a good way to take the dollar out of the equation. You can say that about all the crosses. Euro, yen, euro, Swiss. If you want to trade the euro and get away from the dollar. You know, that's why we look at the crosses and why they're so important.
And I believe we have another new high in the oil here. So even the daily is, you know, over 70. It sure has been relentless.
Yeah, it's nice to see CAD getting on that back on that correlation after the last few days, isn't it?
Yeah, you know, I thought CAD was going to break down here. I still am pretty negative CAD because, you know, CAD underperformed the dollar rally.
Yeah.
So, you know, that makes it one of the weak sisters. I'm interested in this gold if we get, you know, pulled back into midweek somewhere down here. A lot of stuff I've been looking at, and, you know, I don't know. Well, I do know, Ryan. I mean, you're an intelligence gatherer following the news all the time. But, you know, I do it with, you know, people I interview and, you know, friends I talk to. You know, you guys do it in the chat room that, you know, they're people's work you respect. You know,
Yeah.
for example, I'll tell you whose work I really respect. It's these guys at ForexAnalytix. You ever hear of them?
Yeah, smart bunch, I heard.
You know, and this is a, you know, an easy way to see what they're looking to do and what
Yeah.
they are doing, going to the active patterns in play. And, you know, it's at your fingertips.
And the good thing
So,
it's not we're not people don't push their opinions in your face. You know, I'm right. This is it. This is the be all and end all. It's people give their views, and you know, it's there for traders and others to make a judgment on that. You know, and that's what I do. That, you know, I read what Blake says, what you say. You know, the people you interview.
yeah,
You know, and it just all forms part of the picture. And you take certain things, and you maybe leave certain things. But it's, you know, it's getting the full picture. That's the important thing. Get all
great.
sides of the
Yeah,
opinions.
yeah.
You know,
And
you can't marry your own opinion and, you know, have a view and think that's it. That's my view. I'm right 100%. You've got to be objective.
yeah, I mean, part of the reason for me covering my December put strategy in Nasdaq, you know, it did come down. The markets are down 7-8% from the high, and we haven't had a good rally. But someone whose work I respect flipped, and so, you know, part of my reason for being short was the wave count. So I say, well, you know, if one of the reasons I got into the trade is no longer there, I have to respect it. And then,
Yeah.
you know, I looked at it possibly breaking down and then not really following through. So, you know, it helps. And, you know, sometimes I'm not saying that there aren't times that, you know, you follow people and they're not right. But everyone's wrong. But
Yeah.
if you follow people's work, like the guys here, for a matter of years, more so than not, their biases help you.
Yeah.
So, yeah. What else is on your mind, Brian, coming in here today?
Well, there's not an awful lot going on. You know, cable is still creeping up and maintaining the bid. You know, couldn't find a buyer all last week, and now you can't seemingly find a seller. You know, yen's gone a bit neutral, I think. You know, we heard of Japanese retail accounts buying in Asia last night and investors. You know, when you start hearing that, you think there's potentially some upside potential. It seems the options market is now starting to do a bit more covering on the upside. It was a bit lacking before. So, you know, it tends to suggest that people are more worried about the upside and looking for a bit more upside back up to that 112 level.
Yeah.
But news-wise, you know, we've got the China stuff rolling on, other companies, you know, defaulting on payments and things, but I still think it's pretty much well contained.
Maybe we could make one more new high. Never really tagged this channel.
Yeah.
It did make a new high and diverge, but I think there were some time frames that had pretty good momentum, like, you know, over 70 up here, and there was a little divergence there. But, you know, maybe you could make another run at 112. if that happens, then we'll probably get the pop in yields, which all of a sudden become. I'm agnostic on them.
Yeah,
right now.
they've got a bit neutral, haven't they? They're just
Yeah.
undecided again. But I'm still wondering if we're going to just see a higher range develop. We get a bit more sideways action, but rather than being that sort of 30, 40, 1.30, 40% area, we're now in maybe a 145, 155 area. And the same with dollar yen. We're not getting and holding under 111, which suggests we're going to have a look to the upside, and maybe we'll see a higher range develop. Maybe 110.50, 112, something like that. With the odd extension above and below, just until we get the next big bit of news. But we've also got the NFP coming up, as you said. So markets tend not to get too far out of their prams.
So I know that Stelios knows the exact number Friday. So
it's 666, the number of the beast.
He wanted to buy his car. He wanted to buy his missus a car.
Hello, how are you?
Right.
Everybody
Good.
good, mate?
How are you, Jet Setter?
I'm very good, thank you.
Good.
I had a lovely time.
Oh, good.
Yeah. Anyway.
Yeah, you tired?
Yeah, tired from seeing all these really rare cars, but yeah, it was amazing, this thing.
All right, that's why you're flying around looking at cars. Eye candy.
I sat in a car which is one of one. They just made one of those. It was in Italy, Ingmar. It's the Concorso d'Eleganza in Lake Como that they do every year. And it's that and Pebble Beach in the US are the two biggest concours in the world. And it was just amazing. One of my friends owns one of the 50 cars that were on display, basically. And he said, come over. And I said, yeah, of course I'm coming. Anyway.
Where's the keys?
It was nice. Anyway, it's good to be back. But I'm seeing, I think Mark Chandler's piece that we posted on Trader Summit around half an hour ago says it all. It's called Markets Look for Direction, and it looks like we are, like you both said, we're ranging, we're waiting, going into Friday's payrolls. Again, we have something to look forward to try and get some volatility. The good thing that I saw while I was away yesterday is that markets still look a little bit weak, equity markets, although we're rallying back a little bit today. But overall, they're not the markets we had 6 months ago or a year ago, where any dip was straight away bought, barring the COVID thing, obviously, which that was also bought very quickly. If you really think about the scale of what we went through, it was 2 weeks?
Done in 6 weeks.
So yeah, it was a few weeks, which, if you look at what actually happened, I mean, it's incredible, the recovery. So, if you take that out of the equation, any dip has always been bought straight away. So now it's looking a little bit more fragile. But again, I'm going to insist and say that I don't think anything has changed substantially yet. 10 years is still below 150 in the US. And yes, we're getting some two-way action, but I'm not convinced that this is the beginning of something bigger yet, unfortunately, because we want to have two-way action. But that's my view on that. We did have the RBA earlier today, who held rates at 0.1%, record lows. They actually had also trade balance data, which was a record surplus. And, you look at it and you think, the Chinese have actually, when was it, some months ago, they said, well, we're going to stop importing some of their products. And the Chinese are the biggest trading partner. But if you think about it, they're exporting gas and coal and things that have gone massively up in value. So it kind of makes sense for their trade surplus to be at these levels. So the stuff they import is kind of stayed the same price-wise, and the stuff they export is flying in terms of price. So that makes sense. And they did tell us that, yes, the recovery after the lockdowns and COVID may not be as smooth and rosy as we originally thought. So they were kind of a little bit, how do I say? They were what's the word I'm looking for? Anyway, they're cautious. So as a result, the Aussie is doing nothing today. The dollar is a little bit stronger against some of the currencies. Sterling is, like you said before, sterling is doing well. I still think that we're going to see 83 in euro sterling, 83 handle. When we do that, I will be buying.
Fingers crossed.
Yes, crossed. I will be buying there. And 50-year-old silver Jaguar coupe on the show. No, there were no, not on this show. No. Yeah. And yeah, otherwise, we wait for Friday, unfortunately. I mean, I don't know what you guys are looking at. The cryptos are going again well. If Bitcoin broke above 50,000. But I'm waiting. I have very little exposure in equities. The only equities I own are miners. I'm still long, obviously, silver and gold. You guys know that. But other than that, I am still waiting and waiting.
Kiwi could be interesting because I've obviously got the RBNZ.
Yes.
Is it tonight? Is it? Yeah.
It is tonight, yeah.
Yeah, and everybody's expecting a rate hike. This is
25 or 50. That's the question.
I think that switched. I think it switched a bit from the 50. People were looking at 25 to 50. Now they're looking at 25, maybe even a risk of not going at all because of the uptick in the virus.
Yeah. I was going to say that is a risk for the RBNZ tonight.
And we've
I know that we're all kind of like thinking that the dollar has another rally, Blake, but can you also, like, I have the daily Aussie up here and you see, it held 78.6 back and it's acted pretty good. And, if we penetrate this, that the big surprise wouldn't be new lows in Aussie, but a rally up towards 76.
Well, it's so I've been looking
risk on for that probably, or is
yes, that's correct, Dale. You would need some serious risk on, and I'm
okay.
Look, I'm in the camp that the Aussie is going to make one new low. I still think that the Aussie is going to be trading down to the 70-50 level, where I've got some bids down there, and they've been down there for weeks. I was hoping they would make it down there this week. And by the way, good morning, guys and gals, and good morning, Stelios. Welcome back, by the way.
Hello, good to be back.
Hey,
Stelios sat in an Etzel yesterday.
I heard him say he sat in a one of one.
I sat in a Isdera Commendatore. Google it. Wow. It's a 1990s hypercar powered by Mercedes. I had it actually on my wall when I was 20 years old. Suddenly I'm sitting in it.
That is cool. That is pretty damn cool. And one of the things I've been a little bummed out about since COVID, it used to be a car show literally about 2 miles away from where I live, and my father used to bring his no, not that one. A weekly car show. There'd be like 500 cars out here every Saturday night, and they stopped doing that since COVID, and it's a little bit of a bummer. But anyway, so I'm jealous. I think that's awesome. Anyway, going back to the Aussie. So I've been expecting like one more surge lower towards the 70-50 level. I really wanted to buy there. But I wanted to point out this is a chart that I was looking at from yesterday. This is the Nasdaq. Now, this was my chart of the day just before I left out of town. And it's not the best looking, obviously, not the best looking head and shoulder pattern. But the thing that happened with the Nasdaq yesterday, the move following the Facebook outage and Instagram and Snapchat and all that crap. Even though I think that that's very it's not something that's going to stick with the market at all. I was telling Rick had asked in our chat room. He's like, hey, is there any long-term implications for that? And I'm like, nah, I don't, market brush that off. That's, that's not even, no one's thinking about it. But what it did do is technically it broke the NASDAQ 100 and we are slipping now. So, the thing is we made lower lows here. We continue to make lower lows, lower highs. And I think the 200-day moving average in the Nasdaq 100 is very doable, which is also the channel support. Now, we did reference this back, on the blog from the 28th. So if you go back here to the 28th, you can see this is a really important, was an important support, and we broke it. So the reason why I bring all this up is because when you see a move like this, you have to play into, dollar weakness. And so this is a perfect example. Well, this is a perfect time for me to be nibbling on some dollar longs, and which I have been doing the last 24 hours. And I'm going to leave it to the ForexAnalytix, for the guys and gals in the chat room to kind of know where I'm staging some of my dollar longs. But I have been putting on some dollar longs over the last 24 hours, and one of them just earlier this morning. But what we should do is we should take a look at crude oil, because crude oil is trying to pop its head above what I consider very, very strong resistance. Now, this is the Oanda ETN, or CFD, which is very similar to continuous contract in crude. And basically, the reason why I want to point this out is because we are pushing levels that you have not seen since, the lows, the breakdown point since 2012. So these are very important, in my opinion, very important resistance levels. And this is also the 50% retracement roughly of the high to low. Now, if you go to let's go to the CL. We're going to take the front month futures contract here. You can see this is actually the 618 retracement, and that's when we went negative, right? And that's the lowest that we see on that front month futures contract. Excuse me. And we're popping our head above those highs. Now, I think that these levels are going to be very important. I know we're above them right now. And I know that everybody's like, oh, look, it's breaking out. That's what it suggests at the moment. But there's a lot of, you want to, especially on these big levels, I think you want to see daily and weekly closes above or below these prices. So I think this is a really important, this is just going to be a really important resistance going into this week as far as crude goes. And I know everybody's bullish commodities, everybody's bullish crude. A lot of people think that crude's going to 100. So what do you guys think about crude moving to 100?
I think that it's going to 100.
Okay. Hey, Steve, good morning. Stelios,
morning.
what do you think?
I think it's a very good chance, but the problem is that the world is going to have issues with oil at 100, as it always does. So
yeah, and you know what? I've got something to say about that. Ryan, what do you think?
I'm going to say no. I'm going to say because it hasn't rallied with the rest of the commodities as much as they have.
Okay, that's a fair point. And one of the conversations that we were having in our chat room yesterday, for those of you guys that are not part of the ForexAnalytix community, this is what our chat room looks like. And, just give you an example. This is, when I got up this morning was somewhere around here. And no, somewhere around here. Oh, wait, no, over here. You can see how much conversation goes on just in the last hour and a half. All right. So, but one of the conversations that I had, and then by the way, to be a ForexAnalytix subscriber, take advantage of the pricing that we have right now, because this is our really good pricing that we do. Really good pricing that we do a couple of times a year. But anyway, the point I was trying to make about yesterday is I kind of agree with you, Ryan, as far as crude goes. I'm not a believer that crude's going to go right now. It may make it up to 100. But I think that the problem that you have with crude is crude oil is at that point where it's now starting to bite into the consumer, and the consumer sentiment, right? So, if you take people that live month to month. And, you know, they have to, you know, buy, they have to pay higher energy costs. It's going to really start to affect their bottom line. And so that discretionary consumer spending should come down a little bit. So I'm fearful that this move in energy costs, whether you're talking crude, whether you're talking about you know, some of the costs that consumers are going to incur going into the fall, it's going to really start to impact consumer spending and weigh on sentiment too. So I don't necessarily agree that we're going to see 100 right now or moving forward, or, you know, anytime in the near future.
If the question is if crude is going to go to 100 right now, then I'm with you. I don't believe crude is going to 100 right now, like in a month or 2 months. I don't think it's going to be like that easy and a straight line and a straightforward move. But do I think that crude is going to 100? Absolutely. And I thought so since we were at 40, actually. People that follow the Morning Edge webinar know that.
All right. Very good, Steve. So where do you think it's going today?
If we're talking about short term, I think that as long as we trade above the recent breakout area, we had a perfect channeled correction. I think that as long as we trade roughly above 70, 69.5, the path of least resistance is higher. The next upside target is at 81.25, and after that 86.50. I find no reason to be bearish against 70. As simple as that.
All right.
We just hit also overbought levels in the daily RSI, which for me is a signal that this is a healthy bull market leg, because frequently people use RSI the wrong way. They think that, you know, an overbought or an oversold level is a reason to take the other side of the market. But experience shows that usually when you get overbought or oversold levels, you might get a very temporary pullback. But in general, it's an indication that, you know, a market is trending in a healthy manner. So, yeah.
True. Or if you look at a chart like this where you get a divergent relative strength, this could lead to a more severe pullback. So when you have like you can see this is a great example actually.
I agree, but
see a rally in price and see the divergent relative strength.
I totally
if we do
agree.
pull back here, this could be more of a severe pullback towards the 200-day moving average. That's
Yes,
one
I
of the
totally
things
agree,
that I think that you should be very wary of technically regarding
this
crude.
is the weekly
just
chart.
keep that in mind.
Blake?
I'm sorry?
This is the weekly chart, isn't it?
Yeah. I'm sorry. This is the weekly chart, but I'm talking relative
I'm saying
strength.
that because you know very well that a divergence in the weekly chart might take a decent amount of time to play out. I agree with you, but I think, you know, it's a different time frame now that we're talking about.
Yeah, I'm just talking about charts in general. When you're talking about relative strength, if it reaches overbought, I agree with you. But when it's met with some severe divergence, which we're seeing, that's where it becomes more of an issue. Yeah.
And at some point we're definitely going to see a very decent pullback. There's no question about it. Nothing moves in a straight line, almost nothing.
And then here's your daily chart, just so you guys can see. This is what your daily chart in crude also looks like. Now, one of the things that we have heading into tomorrow is we're going to have I know we have our jobs report that's coming up this week, but we have our ADP non-farm. I'm really in the camp also that the data is not going to matter as much anymore. Not for the Fed, or excuse me, not U.S. data. I'm not sure if I made this point yesterday on F.A.C.E, but I'm going to make it now, and it's a little bit of a blur. Yesterday was, you know, just trying to catch up with being gone for a few days. I don't think data here in the U.S. is going to count as much. We know what the Fed's thinking. We know that the Fed is going to, they want to wind up or wind down tapering by the middle of next year. We already know what the pace is going to be. So unless the data is extremely horrible, even if it's extremely horrible, like let's say we're supposed to create, like, what's the number, Ryan? 500,000 jobs?
Yeah, I think it's about 500. Yeah,
about 500. Yeah, let's say we create, I don't know.
L says 666,000.
Well, yeah, Stelio said that, but let's say we create like 200,000 jobs. It's going to be a hell of a bad number. The dollar will probably get hit initially, but I think you have to buy those dips because the market already knows what they're expecting from the Fed. I think if we had two bad back-to-back numbers, then the market might reconsider that. But we kind of know what to expect from the Fed the next, I guess, let's just call it 8 to 9 months. So therefore, any type of outsized number, especially if it's bad, I think you have to be buying dollars as a result. So anyway, just some food for thought, because do you guys have any last minute thoughts on that?
Well, let me see if I'm reading you right. You want to buy breaks in the dollar.
I want to buy pullbacks in the dollar. Yeah.
Okay.
Yeah, I'm still buying dollar pullbacks, and you got a lot of people that are pretty bearish the dollar. But just keep in mind that if we break this 38% retracement, that's the 38% retracement of the COVID, move lower.
Yeah.
We start breaking above that 94.60 level, and we might trade up pretty. So a lot of people trying to lean into it right now.
Yeah.
I think
that'd be probably a great short if that happened up there, because I read in Jim's letter that compared to last year, and I'm going into the interview anyway, that remember how positioning was so bearish a dollar coming in at the beginning of the year?
Yeah.
It's flipped. So, there are a lot more dollar bulls now. It's the opposite of what it was in January.
Yeah, and I think the dollar could still squeeze here. I came into this year pretty bullish the dollar and on that for that reason alone. But sentiment has flipped, but it's not extreme either. So it was extreme. Remember, it's extreme dollar bearishness.
Yeah,
everybody was expecting the euro to go to 130 in December,
right?
And here we are, the euro at 116. And I think the euro's got more upside or more downside. I still think the euro is going to see 112, 113 before we make our move higher again. So anyway, food for thought. But that's going to be that the recent high, last week's high in the dollar index is very important. It is the 38% retracement. It comes in at 94.50. And while we're below it, I think if you are a dollar bull, you have to be cautious. You have to be a little careful here. All right.
Thank you, Blake.
Hey, thanks, guys. Have a great. By the way, if you are a ForexAnalytix subscriber, we'll see you on the morning edge here shortly. Remember, we have a pricing discount. We will only offer this till, well, I guess, looks like the next few days. So once that goes, it's gone, and then probably won't see that till the beginning of the year, I'm assuming. But we'll see you on the morning edge. Thanks everybody for your support. And thanks, Ryan, Steve, Stelios, and of course, you too, Dale. Have a great interview.
Buddy.
Thanks, everybody.
Thank you, team. Steve, Stel, Ryan, Blake.
Bye, mate.
Alex, welcome to F.A.C.E. It's a pleasure to meet you.
Hey, Dale. Thanks for having me on.
It's great to have you, Alex. Have you been on Zoom before? Because the green button is your screen share if you want to do that.
All right. Let's see.
Unless you just wanted to do a talking heads thing, we could
try that too.
Okay.
Bore your listeners.
No, you know what? I want to see maybe you could show us some of your setups and things that you look at. But can we go into a time machine and take it back to how you got involved in trading and the industry and maybe what you were doing before, and a little bit about your journey from point A to what you're doing now at Macro Ops?
Sure. Yeah. Okay. Well, so I took a little bit of a circuitous route to get into markets and trading. I started off, I joined the Marine Corps about a month after 9/11, right when I turned 18 years old. I went into the infantry, did 4 years active duty, did a number of tours there. I'd been introduced to the markets in my early teenage years from my dad. He's a CPA, used to work for a number of hedge funds and stuff. And so I got my exposure that way, traded stocks when I was, 13, 14, during the 90s. But I was never, I enjoyed it, but I never got the bug or anything. But after the Marine Corps, my original plan, I was going to go to college. I was going to get a degree, come back as an officer, go to flight school, become a test pilot, and then apply to NASA. My dream, my entire life was, become an astronaut.
Right.
I ended up getting an eye injury in the Marine Corps, so that basically cut out flying planes for me. So then after that, I did a number of things. I ended up finishing college, studied a little bit of finance there, but I thought it was just a bunch of gobbledygook. I didn't really like the stuff that they taught. I was always trading a little bit on the side. Did odd jobs like bodyguarding and for Hollywood celebrities. I went back into the military, this time in the Army National Guard part-time. I worked military intelligence for a while. And I was just kind of doing that for a few years, trading a little bit. And then it was like around 2011, 2012, I started to get a little bit more serious. And I wanted to make a bankroll. So I took a contract over in Afghanistan doing military intelligence, like human intelligence collection, interrogation type stuff. And it paid really well. So I went over, spent a year in Helmand, operating out of there, flying around the country.
Oh, yes, I recall your journey now.
What's that?
We've talked before, haven't we?
No.
There's another guy I have to introduce you to. He did the same thing, and and I think he was, went for the bankroll, and I think was involved in, watching the prisoners, and he went into marijuana. Pink sheet type marijuana, poured all his money that he was making as in the Corps from, while he was overseas into marijuana stocks before they became fashionable. And it's and I'm listening to your story. I go, I've interviewed a lot of people. I go, God, I've heard this before. So, okay. So I'm thinking, okay, see, I need
drivers out there.
I need our viewers here to, anyway, his name's Alex Sunderland, one of our attendees is telling me.
Sunderland.
Anyway.
Yeah, I don't know the name.
All right, he's on Twitter too, but yeah, you guys, I don't know, you guys had the same strategy, go risk your life to put together a war chest to trade.
Yeah, well, I mean, when you're all your professional career just being a grunt, you only have so many means to make a bankroll. So
yeah,
I hate to jump in. Hey, Alex, this is Blake. How are you?
Hey, Blake, how you doing, man?
Nice to meet you. I was actually just listening to your story. And ironically, I just had visited a friend of mine that I hadn't seen in 28 years. That we were in Guam. Well, we were both Marines. We were grunts in 3rd Battalion, 9th Marines before it was disbanded. We spent 1990 through 94 together in, Guam, Japan, Indonesia, Malaysia, Somalia, and then California. So, it's nice to meet another, devil dog. So.
Yeah, right on, man. Yeah, you're an old salt dog, so you got all the good tours back in the day.
Yeah. Funny thing is, I was selected for Scout Sniper Platoon about a year and a quarter before I was getting out, and they're like, "Yeah, we need another 4 years from you," and I'm like, "Yeah, that's not going to happen." So, I bowed out, after the first day because they wanted another 4 years from me, and I said, "Nah, I can't do that." But
let me ask both of you guys a question. All right, because I've spoke to John Netto, former Marine. Okay, I mean, you don't know how many former Marines have gone into the trading business. Could it be kind of that you enjoy the adrenaline? You guys are kind of like adrenaline junkies, and even though you're not risking limb and everything else in the markets, that there's danger out there and there's strategy, and that it appeals to certain military people.
I don't know about I don't know about that, but I'm going to let Alex go on with the interview. But I would say, for me, and I'm sure he could probably confirm this, I was just young, dumb, and full of
yeah.
Oh, Alex, you finish it. All right. You guys have a good one.
Yeah, nice meeting you, brother.
All right.
Nice meeting you.
All right. So Alex, after you made the bankroll, and you were trading stocks when you were a teenager, who taught you how to trade? Did you have any influences or books, or are you pretty much self-taught?
Yeah, so it's a little bit of everything. I mean, so like when I went over to do my contracting gig in Afghanistan, I literally brought with me a trunk, like a 100-pound trunk of just 50 trading books. And so I work 12-hour days, 7 days a week, and I go back to my little hut and just read, study markets, trade, for like late into the night. That was kind of what I did for a year. And when I got back, I just knew I wanted to trade. I didn't have any formal finance, background and stuff. I like learned enough to be dangerous in markets, to myself, not to anybody else. And so I just sought out mentors, and luckily I'm very fortunate that a bunch of people have helped me out along the way. And so I got connected with this guy in Malibu. He's a former IB prop trader, and he's real successful. And then he kind of retired and was trading money for a small group of clients and stuff. And so he basically brought me in. I was able to just kind of sit at his desk and watch over his shoulder, and he just kind of taught me market structure and just the ins and outs of risk management and stuff like that. And so I did that for close to a year. And then I ended up going to work. It's an old publication, a trading publication. It's no longer in existence, but it's called Mercenary Trader. And I used to really like it back in the day. Well, I went to work there for a little bit, which was interesting. And I met some other people. I ended up going and working for the small macro fund after that for a little while, just kind of as an analyst. And then this was, 2014, 2015. I'd learned, a decent amount. I'd gone around like knocking on a bunch of doors at hedge funds and stuff, just, seeing if I could get a job. I ended up getting a job offer at a large East Coast hedge fund. It was Bridgewater, and I was in the process of moving out there, moving my things out to start. And I just kind of got cold feet at the last minute because I'd like come all this way. And but by this time I'd, learned the game. I was consistently profitable in trading, and I just kind of wanted to do my own thing. And I was really excited to go work at, that hedge fund because I was a big fan of their work and stuff, but it's also a big organization. I was going to be in a junior management role. So essentially I was going to be running a lot of meetings, which is my exact nightmare. And I didn't want to do that. I like kind of doing my own things. And so I called up two of my older buddies, and I just asked them if they wanted to start a blog. And like,
when did you start Macro Ops?
And put out research and just kind of see what happens. And they agreed, thankfully. And so, we started doing that, almost 6 years ago now. So we've been running Macro Ops.
Nice.
And we do, just research for professional, institutional, and kind of like, serious retail traders. We recently launched a hedge fund, Foundation Capital, earlier this year. And so, we've just been kind of doing that. But
okay, I went to your website, and says you're not your normal newsletter.
Yeah.
So why? And so what makes you so special, Alex?
Well, my mom always told me I'm special, and I always believed it. But,
I got that validation too. Yeah. So so we've been deluded our whole life. Because mothers think all their sons are always special. But anyway, so go ahead.
Oh, yeah, I was just going to say,
bushy, bullish, or bearish.
The idea with Macro Ops, what we wanted to do is, there was just a lot of, just in our minds, this poor quality research where it's just, playing to people's biases, sensationalism, and stuff like that. And it wasn't true market analysis, and more importantly, like didn't talk about the stuff that really mattered. And this was like 5-6 years ago, so that's like, pre-history days of the internet. It feels like, because the space has changed so much since then.
And saturated.
And And so, yeah, but like we started the site where we focused mostly on like, risk management, building systems, trade setups, how to think about things probabilistically instead of creating these, giant narratives that sound really great and make you sound smart, but, or in the end, just, kind of a form of mental masturbation, not a form of profitable trading.
Okay. So you have USD MEX up here. Do you trade it?
Yeah. So we dabble kind of in everything. We have a number of strategies that we run, like profit centers. So I have a team with me. We have a value guy who focuses purely on finding value plays. We have two quants, one that focuses mainly in the options vol space, and another one that does purely commodities. And I kind of sit around and play in everything. I like playing in the FX markets. I like playing in futures and stuff. And so
what's on your radar now, Alex?
Yeah,
we've had about 7% pullback, 8% pullback. Tech, mega cap tech has gotten slammed. I mean, Amazon topped a month ago. Is this enough of a pullback in the market before we launch again? Or are you looking for something deeper?
Right. So like a quick 2-minute rundown of kind of how I'm thinking about stuff right now. So here's our growth composite model. It just looks at a number of leading growth indicators.
Okay, we're still seeing the peso.
Oh, you're still seeing the peso? I don't know.
And do you believe that the peso is a good risk-off instrument? Because we recently had that nice pop in the peso, US dollar MEX.
We're currently long the US dollar peso, and it's forming long-term kind of fulcrum bottom potentially. So we have a small position. We're going to look to add on upside follow through. Just playing a general risk off, which is what we've been positioning for the last 2 weeks in broader markets. And I'm fairly bullish on the dollar looking out, kind of going into the next 2-3 months. At least that's where my bias is. So I'm looking for opportunities to get long.
Okay, you have a view on
here.
On the spoos.
How do I change the?
Hit stop share, and then you're probably going to have to a new share. There you go. How old are you, Alex?
37.
Yeah, you sound like a young guy.
What's that?
You sound young.
Oh, thank you.
Well, I mean, you're not as young as you used to be. None of us. I'm not for sure.
So one of the things that we're looking at is the macro growth composite. It's just one of our indicators that looks at leading indicators. So
cool. All right. So you have your own proprietary type indicator here.
Yeah. This is but luckily we have people on my team that are much smarter than I, and they do all this work. And so this kind of just gives us, we're always trying to identify what regime we're in, from an economic standpoint, from a market standpoint. And so we start at the top and then we kind of drill down, doing concentric circles to kind of build context out. And so the macro growth composite is just a composite number of leading growth indicators. It shows that we've been in kind of an expansion phase recovery for the last, year, 18 months. But we're recently turned over, and now we're moving into what's going to be kind of a mix between a slowdown and an expansion, because we're coming from high levels of growth, but that delta on that growth is falling, and that we're also moving off the back of these large liquidity impulses, which are turning negative, in the next month or two. And that's going to, start to really draw markets looking out over the next year or so. So here's the rest of our dashboard, and this is like a number of things we look at, but we have a composite indicator to just kind of measure trend risk, which we call trend fragility. And so we're just looking at positioning and sentiment, volatility relative to price action in the general market.
That's what's in that red indicator, all of those measurements.
This is that indicator right there.
It almost looks like an RSI.
Yeah, it's been elevated for the last 2 months, and so that just tells us okay, it doesn't mean the trend has to end. It just means that it's becoming more susceptible to larger pullbacks. And we had a number of things trigger in the last 2 weeks, like we saw this, a giant thrust aggregate fund flows. You saw a lot of people pile into broader equities, and this measures the fund flows for all the major U.S. indices. And we saw that, in January 2020,
prior to COVID.
And again in January 2018. And so you kind of see that stuff before, we get a bout of risk off. In addition, like we've been in, 7 months of consecutive bull bars in the S&P. So like a big form of analysis that we do is Al Brooks. He had a big influence on me early in my trading career. So I don't know if you're familiar with him, but
what's his name?
Al Brooks.
Al Brooks.
Yeah, Al Brooks. He's an OG. He's been in the game for 30 years, and he runs his own trading service, and he teaches kind of bar by bar analysis, and I found it really useful, and so it makes up a core component of how I kind of do technical analysis. Okay. But anyway, so yeah, I mean, like, so we turned bearish about a week and a half ago.
After that 61.8% retrace.
Yep.
Off the first break. Okay.
Yeah, off that first break. Because I mean, like what we try to do is just we don't try to be too smart. We're more of a mostly we do a mix of stuff. We do a lot of long-term positioning, and then we do short-term swing trading where we run these systems that we manually backtest in a number of different markets. And so like you could see, like this is kind of how I look at a chart. We have the SQN, which is the system quality number that Van Tharp created a while back, and it's to measure the quality of a system you build, but it can also be applied to markets, and it's a great indicator for statistically breaking down different market regimes. So I can look at this. There's 5 regimes. The light green tells you it's a bull quiet. That just means in a bull quiet, it's the trend is up. The best looking sell setups tend to fail. They tend to get bought. It's very frustrating for the bears. When you move into what you see right here, the dark green, that's a bull volatile. That's where volatility, daily volatility kind of spikes, which just shows that the trend's getting a little bit more frenzied. And that's usually when markets start to peak, which you can kind of see is exactly what happened here. And so I use them. We have like different systems and different setups that we run depending on which market regime we're in. And we just, we apply that like across the board and into our broader portfolio. So, I mean, looking at the market right now, we've been in an uptrend for 7 consecutive bull bars. And so this is we saw our first bearish close last month in September. And typically when you see that, you see 1 to 3 months of, a pullback 10 to 20%, or at least an extended sideways consolidation for 2 to 3 months. And so I think that's what we're in here. But there's like a number of things that, we're looking at that are a little bit different this time. High yield spreads haven't, blown out a ton. There's still not a ton of fear, which, could go different ways. You could say, okay, well, this sell-off likely has a little bit more to go. Small caps, I think is the most important chart to watch right now. I mean, they've been in a sideways tight compression range for.
You're looking for an upside breakout with the way they're acting now?
Yeah, I think we just have to pay attention, because that's a big question to me right now. Like, are we entering a period of extended risk off, where we're going to see kind of a positioning washout, or are we just seeing like a rotation back into kind of cyclicals, with the rising yields and stuff like that? Because growth is slowing, but growth is still going to be very elevated over the next, 12, 18 months. But I also think the macro game has changed significantly in the last month or so with the recent Fed meeting. I thought was surprisingly hawkish. I think it shows that Powell and the FOMC are starting to get a little bit scared about inflation. I don't think they actually think that it's transitory now at this point. And so they're getting a little bit spooked. And so I think that their whole, FA.C.E, average inflation targeting policy has kind of been put back to the side. And so, a rate hike is now on the table for the end of next year. quantitative tightening is going to end sooner than previously thought, and so it just seems like their messaging has changed in a very important way, and which it wouldn't matter that much because potential rate hikes are still a long ways off. But when asset valuations are so elevated, that type of signaling does matter because there's a lot of duration on this market, right? So
does the duress in China factor into your thinking right now, Alex?
Yeah, it does. I think Evergrande, I don't think it is a systemic, layman moment or anything like that. I think the CCP will manage, everything, and I think, because their number one priority is just stability, right? They just want to maintain.
You know what I was thinking, Alex?
Yeah.
The Winter Olympics are there this year, right? In Beijing. Yeah. So, I mean, I can't see Xi letting things really unravel before the Olympics.
Exactly. I don't think that's going to happen. For China stuff.
When are they? Do you know when? Is it February or?
No, I don't know the exact dates.
Yeah, but I was just, because I do think what's happening there longer term is a major problem for, geo and financial. But I think that he'll do what, they'll come in and, they'll ease and they'll manage certain things so that when the world is watching Beijing, they're not in the middle of a credit crisis, or at least it won't look like they are.
Yeah, I think with China, I think they're at a crossroads, right? Because their answer to every issue that they've had is just more leveraging. And that's because of this very particular system that they've been in, that Michael Pettis, the economist, Chinese focused economist, has done a lot of great work on. But that obviously isn't sustainable. Now they're, debt to GDP levels are arguably the highest in history out of any country. And luckily that's, mostly yuan-based debt, but still it's pervasive. There's, a lot of worthless loans out there in the Chinese market. So they're going to have to start to manage it. And Xi has signaled that that's a priority. He wants to, reorient growth back towards more, or for the first time, towards the consumer, which means redirecting a lot more of the national income towards the Chinese consumer. So, that means the large corporations and SEOs are going to get less of that GDP pie. But Chinese consumers are also very leveraged too. And so I think what that's going to translate to over the next 5-10 years is that they're going to have to accept a much lower growth rate, and something more along the lines of what we see regularly in the developed markets, which is going to be 1 to 3%.
They have more practice with austerity than Americans do.
Yep.
I just want to cover one more area, and then I want you to show people your website and how they could follow you. A quick view on commodities, agricultural. We know energy's been doing well. Are you a believer in a commodity super cycle, or we're just in a cyclical bull market in commodities that's being accentuated by supply chain constraints?
So I think it's actually a mix of both. I think we likely are at the beginning of a longer term commodity super cycle, if you want to call it that. I do think some of this stuff is run a little far too fast, and a lot of that's driven by these supply issues, which much of that is going to get resolved over the next year or so. But I think the energy space is extremely interesting. We've just had a dearth of capex, for the last 6-7 years there, and so it's funny that the entire ESG movement is basically created this own monster that's going to come back and bite them in the butt, because you're not going to have the supplies to meet demand at all, looking out over the next 2, 3, 4, 5 years. A lot of
you have any favorites there? I mean, a lot of people, like Reddit was talking about, although they've learned the lesson, they can't short squeeze a global commodity market like they can one issue of stock. So they're talking $100 silver, A lot of people really like silver. I like the grains because the Fed can't print corn. What do you think?
Yeah. Yeah, I don't have a strong opinion on the grains right now. I mean, we're short soybeans. I just run, our swing trading systems in those names. So I mean, we're in and out within usually a week or two.
Yeah.
But I do like looking at the energy space. We're long, deep out of the money calls on names like Comstock Resources, which we've been, we bought a couple months ago, so that's been a good name for us. Things like, Paneer is another one that we're very bullish on. It's just an oil and gas E&P. Vista Oil and Gas is another one that we really like. That's based out of Argentina and trades on the Mexican exchange. They have some amazing, resources and stuff like that. And I think I should pull up that chart too.
You watch everything.
Yeah. So, I mean, I think the energy space is going to be really interesting. And we're, I think we're bullish on the dollar over the short to intermediate term, looking out in the next couple of months. But I eventually think the US has more policy space to really juice things when they get nasty, versus much of the rest of the world like Europe. And so I think that's going to eventually translate into a resumption or really a true start to a longer term bearish dollar trend.
Okay.
Which, obviously will be good for the commodity space.
I'm really glad I reached out to you on Twitter, Alex, and interesting interview. You're a fascinating guy. And, I can tell after talking to someone for 5 minutes that they know. So what's the best way for people that are watching us live right now and see the video later to follow you, get a hold of you, maybe participate with you in your work?
Sure. Yeah. Well, so our website is just macroops.com, macro-ops.com, or you can find me at Twitter, Alex Barrow at macroops. So, follow me, shoot me a DM. My DMs are open. Sign up. We do a free weekly market newsletter. So yeah, you can find me there. It was a real pleasure talking to you, Dale.
Yeah, I'm. You're now my trading warrior brother. How about that?
Right on.
Huh? Yeah, you're a warrior, and I could tell. And I wish you nothing but a great fall investing, scalping, trading season. And if you're open to it, we're going to do this again, Alex. What do you think?
Absolutely. Thank you, Dale. Right back at you. I appreciate it.
All right, Alex Barrow, everybody. So you can follow him on Twitter at MacroOps, website of the same name. And remember, everyone, hope you had a good turnaround Tuesday, and don't just count your pips, count your blessings. Thanks again, Alex, for being here. Glad that our paths crossed.
Same, Dale. Thanks. Cheers. Have a good one.
All right, everyone. All right, that's a wrap, everyone. You could join the team in 12 minutes on the morning edge. Make sure you have shaved and that your morning edge was used. Everyone's thanking you, and Alex, and I thank you too. And you're welcome, everyone. Monica, Laura, Jades, everyone. Have a great day. Good hunting. Adios.